First of all, welcome all you brave souls who have come through our webinar to get things kicked off here. I'm going to put up my deck just so we can kind of stay on track. Let me know if everybody's able to see this. Can you see that, Nelson?
Yes, I can see it.
Okay. So first of all, a little bit of housekeeping just on the webinar series. So these are the different dates. All of these are posted to our website on the news section. So if you go to our website, you'll be able to see registration links for all of these. For the more, I don't know, housing nerdy in the audience, there's some really good stuff in here that I hope is, or that we hope is educational around why we've done things the way we've done them, what it means to build permanent real estate, particularly in places like California. So I would encourage you definitely to sign up and participate in as many as you can. For today's session, the question that we're looking to answer here is like, what's different about Blokable? And what prompted us putting this title together was there's just so much noise out there about different startups and different companies that are doing different things and trying different models and raising money and putting new types of systems in place. And we've just been at this, so deeply and so heavily at this point that we wanted to really bring attention to the key differentiators about what we're doing because we feel that Blokable is the real scalable answer to how you address, the really deep rooted issues in the housing crisis. So before we dig in, Nelson, anything you want to say before we get moving here?
No, I would just say that it's a very deep subject, and I wouldn't expect to understand the difference right away because even the most seasoned real estate professionals get lost in this. We really are the first, and definitely in housing. It's been done once in commercial. I did it years ago, decades ago, but it's a unique model. So you have to understand how wealth is created, and what the development process is, and then in the end, what's it worth after you build it, and how you pay taxes on it. So it's a complicated process to get right.
So the first question that we're looking to answer is like, why focus on multifamily? So we'll go through some slides. We kind of broke it up into a few sort of key areas. The one is obviously just the demand side. So the U.S. is 6.8 million units short of housing. On the risk side, multifamily is widely considered the asset class of the future. It's a lot of investment in multifamily. It's the lowest risk asset from the perspective of a lot of real estate investors. There's a lot of money that flows into multifamily housing on a yearly basis, both overall as an investment sector, but then also for mortgage lending. It's very capital efficient. And this is one point that we really want to hit home on, which is, development as an activity, one project has the same set of tasks as another, which means, you have a site, you have to get it entitled, you have to get it permitted, you have to build something. And so looking at things like single family housing or ADUs, there's this cross section of what's the most capital efficient type of real estate to build. You have to go through all the same steps to build a single family home or an ADU as you do in multifamily. And if you look at the trends on the city basis and where housing needs to be built and where we're going to get the most units and where we're going to have the most impact and what we can really manufacture and what it means to be able to scale it, this is why, we really wanted to focus in on multifamily. And Nelson, maybe you want to talk for a moment about the other side of it that you were touching on in our earlier meeting around the idea
Yeah.
of efficiency.
Yeah, so I think there's multiple efficiencies. One way you're probably going to hear talk about all over the world, right? From the World Bank and everyone else jumping up and down ESG, and we'll get to that later. We're very efficient as a building. We're very efficient as a building process. It's the only way to get rid of the waste and carbon impact and everything else, and that's actually a proven thing, and you can see that up, I think, in our website. But there's another efficiency that comes into it. It's the efficiency of capital of building something. And as you build a project, you have to go out and do your plans. You have to get the permitting, engineering, do all your foundation work and utility work, and all these things later on. And it seems simple, but I've been in this business for decades, and I can tell you it never gets shorter unless you squeeze that process through some other mechanism. And if you did it in an ADU, you could imagine having 1,000 ADUs spread across a large city, what that would take in manpower and time and everything else. or single family. Imagine what that would mean. Almost the same thing, right? Just a massive amount of people and even more work. So when you can compress that large kind of physical asset into one place, it means you can do it with a lot fewer people, a lot faster, and a much lower cost. So your return as a business is much, much higher from a capital efficiency point of view in multifamily. And I think the other thing that's very, very important that Aaron touched on earlier is that in the past, no one really cared what you were building. People pushed for single family because people with money wanted a single family home with a big yard. ADUs were a response to somehow give people a backyard revenue or find more housing. It hasn't really worked. Multifamily was kept out of good neighborhoods because no one wanted it there. NIMBYs were everywhere. And it just so happens that what we found out now as the decades have piled up, we now have communities that aren't just inequitable. We don't have blended communities. We have great school districts for people with the money in the big homes, and we have bad school districts in the other areas. So there's all these things that housing has caused. And now, particularly in the state of California, they've come up and said, there will be a plan to address housing, and you will address it, and it's going to be multifamily. And if you don't find a way to increase your housing stock, we will remove code and you will build whatever you want. The developer will build whatever they want. That's actually happened in Santa Monica, California recently. And they take and remove all parking requirements and height restrictions and everything just because the state can't take the homelessness anymore and the impact on housing. So we're at this weird thing in place in life where finally everyone's all focused on the same thing, efficiency of the build, both in terms of number of units built and the cost. Anyway, go ahead, Aaron.
Yeah, and then the last 2 points are around impact and moat, which is, hopefully kind of lead through a logical sequence with these things. I mean, the first issue is just, and there's multiple numbers that are cited across the board that range from 3 million to 7 million, but there's a ton of undersupply in the housing market, right? So then the question is, what is the type of need? What is the type of asset? What is the type of real estate that's going to actually make a meaningful impact on this? And if you look at, general trends, I mean, the one thing, we have a steadily growing population that's becoming more dense in terms of, what the number of people who live per square mile. And from 1990 to 2030, you can see it's a steady rise. So people are moving into denser areas, moving into more urban areas just as a trend. And if you look at what the percentages of multifamily of the broader real estate sector, multifamily in 2022 this is a census data, represents about 34.1% of overall housing starts in that given year. In 2022, it was 34.1% of new projects, new starts were multifamily. And we think that's going to continue to grow. That's one area where the efficiency becomes important. But then politically, what's happening is there's a big push to stop growing sort of endless suburbs, stop growing single family, communities. You're not going to get that many numbers with ADUs. The numbers, if we're 6.8 million units short of housing, you're not going to see 6.8 million ADUs, 0.8 million ADUs across the country. This is the typology where it's going to have the most impact, which is this sort of, this middle density, missing middle housing, all the way from the smaller up to the larger. And this is what's starting to make a big impact politically and has a lot of backing. And so then if you establish that as the trend and where the housing needs to go and sort of geographically where it needs to be and the typology it needs to be, the other issue is there's a lot of financing for multifamily housing. It's a very mature sector. It's viewed as a fairly low risk activity. It's got great forward potential and investors love it. So on the two sides of it, 279 billion invested in multifamily last year. That's more than half of the total. It's more than half the investment than the next highest real estate asset class, which is crazy. And then on the mortgage side, $459 billion in mortgage origination, which is important because that's where you get a lot of the liquidity from projects you develop as a developer. Go ahead, Nelson.
Yeah, Aaron, let me add that it's very important. There are investors that are looking to build single family, and they do that because they want to build single family to rent. It turns out that's a very hard market. It typically rents to the wealthy people, definitely not the middle class and the underserved. There's limits to that. There are a lot of people buying up single family assets. Every time there's a crash and interest rates go up, the big funds buy up single family assets for rent, but again, they're not looking at building it. The other thing that's difficult to understand unless you're in real estate, to operate ADUs and single family as rentals is very different than operating multi-hundred unit multifamilies. You can be much more efficient, provide better services and a better community with multifamily. So that is why, for every reason, it's all focusing now, all the governments and all the funding is focusing on multifamily as the leading asset.
Yeah. And then this is the one, I mean, I think we have a little bit of an axe to grind on this subject, which is, we as a company spent the last 2 years in a heavy engineering phase because we understood the amount of engineering from a regulatory perspective that was necessary to meet multifamily code in California, high seismic, different conditions. You look at most of the, companies that are building in a factory, whether they're building ADUs or different types of, I mean, the code requirements are minimal, and the delta between building single family or building an ADUs and building a real 5-story multifamily apartment building is massive. These are the codes that we have to hit, and we do hit as a function of all the money that we've invested in our regulatory process to understand what codes we need to hit, how we're going to test that, how we're going to verify that, whether it's state or local that needs to oversee it. I mean, our system meets the strictest codes, and we've done this for a reason. This is a different webinar around why start in California. But the reason is we did it in California for a reason, which is we wanted to hit all these codes. These are the toughest codes in the country, and now we have these in place, which means from here going to other jurisdictions is pretty straightforward. But this is what it takes to build multifamily housing, which for us is a really big competitive advantage.
Yeah, Aaron, I would add something to the regulatory issue. So if we wanted the easy route, we would be building on the East Coast or Midwest, and it's cheaper to build. You don't have it's a totally different frame structure, different outcome. People who build in those areas cannot cross the California state line and put those properties here. Some of the biggest entities around, they'd have to modify the buildings for site-specific seismic and passing all the codes. So it's very, very difficult, which we'll get into another time. Instead, we came here and created a structure that was what we call land agnostic, which means we can go anywhere in California and our building passes code without any structural in it, or any extra structural. We don't have what we call shear walls or bracing or tension rods, which means a big wide open space. There are laws that they're very worried about having buildings that when you stack them up, they collapse on each other when you get an 8 or 9.0 earthquake. Well, that's one of the big problems in California. That plus snow load in the mountains, and you got a big issue. So it's why it's known as being the most kind of regulatory burdened cost structure in the country. California is the worst place, and that's why we have a big housing problem, because no one wants to build for California, which is why we chose to solve the problem here.
Yep. So moving on from sort of why multifamily, I hope that kind of gave some basis around why multifamily is difficult from an engineering perspective, but also a giant opportunity from an investment perspective. And then getting into the business model. So if we're in multifamily, then the question is, what's the model that's going to extract the maximum amount of value and create the most amount of wealth as a result of building multifamily? And this is something that we developed this graphic because we were looking to convey mostly to investors, like how a typical project is done, like who's involved with it, and what traditional commodity input modular construction, where it serves in the overall hierarchy and the process. And so we look at this as, every project has to go through these steps, regardless of the size, regardless of the value, how many units it's going to create, how much wealth it's going to create. And if you're an input into the process, so you have two sides of the equation. You have the developer who owns the site, controls the financing, controls all the upside. They're interested in long-term ownership. And then you have the rest of everyone else who's basically participating in the project economics and trying to make, a margin and minimize the risk. So most traditional, or all that we're aware of, we're the only vertically integrated modular developer that we know of. The rest of them are modular construction, panelized systems, 3D printed, or PropTech companies. They sell into the general contractor to the developer. It's a very different incentive model because they're looking to make their margin on a project. So what we did is we vertically integrated the key pieces of it. So we didn't create a heavy company in terms of the overhead that we need to manage to be able to run, but we brought the key pieces together essentially to create an incentive loop for consistent and continual cost reduction and quality improvement, because we take the cost reduction out in the value and the wealth that we create on the real estate side. So by integrating the manufacturing, the development, and the ownership, for the first time, you really create this sort of continuous improvement, continuous wealth creation, and it dwarfs the economics of any conventional modular construction or prefab idea.
Aaron, would you go back one slide? I want to mention something to that slide.
Yeah.
But this goes to our business model. So I created this solution decades ago. I'm the person who literally created the first commercial design builds to solve this problem. How do you make it more efficient, lower cost, faster, higher quality, lowered the cost by 40%, did it in half the time and twice the quality. You take it to housing, very, very different. So what's different in housing is in large commercial, you have to build on site. Housing at 5 over is the one thing, and we'll have this on another webinar, but at 5 over a podium at a 5-story building, that is the one thing you can manufacture over and over if you design it properly without having to change the manufacturing. So you can control the contracting. So in this big web that you're seeing on this site here, we take and put all of that engineering and architecture and all the things that most of these actors do, and we put it into the tech that supports our project. So we're up at the top with the developer. We're also the person that supplies all the engineering and architecture as a base core element. And then when we look at a site, instead of having to go around and run for months and months and deal with all these people and risks and time and cost and all the problems, and it just goes on forever if you're a developer, typically 3 to 5 years. We put it all into the product itself, and it lets us do something fast, highly efficient. But as Aaron was pointing out too, we've got that cycle of ownership. Our point is, don't sell something into a cycle, into this, like the modular sells to the general contractor. Everybody knows what that's worth. At best, they make a 10% margin. We look at it and said, well, we set up this opco propco structure. We end up with this Blokable holding company, which has the operations side, which is over with the manufacturing side and the development and all the engineers and architects and the software. And then it works with our asset holding company. And all it does is go out and build assets. It doesn't mean we have a very kind of asset heavy or expensive process, because there's plenty of money for building assets when you can build them at the right cost, which we do. So we have this split market structure where the investors own a piece of Blokable LLC in the factory, which becomes more and more efficient and faster what it does, and lower cost. So it means that Blokable Holdings over on the right side gets more and more real estate. If we were selling a product, we would be stuck in a process, probably 1.5 to 2 years in the process. We may get a contract with a developer, we may not. You'd lose the contract. They always squeeze your margins down to where you're going broke. The industry is forever failing because of that. Us as a developer, we can design it up front. We know the cost up front. We sign the contracts, we lock it all in, we raise our own financing. We're never subject to the whims of the market. And instead of passing all cost savings on to the developer for being faster and better, we keep the real estate. But the beauty of this structure, you'll notice it says Blokable LLC and Blokable Holdings LLC. We are not a C Corp for a reason. Anyone who's a developer who does what we do is set up as a C Corp, doesn't know what they're doing. You set up a company like this because you build tax-free, because we are a builder owner. And then we go out and refinance our assets tax-free, because there's no taxation on that refinancing. It gives us cash out proceeds to distribute, gives us cash out proceeds to reinvest. And then when we eventually sell or distribute our real estate portfolio to our investors, it's done tax-free again because of the structure. So it's all set up. And let me say, if it's sold, we just converted what would have been what they call ordinary income tax, which you normally pay, to capital gains. So our entire business structure is built around extracting every bit of efficiency out of the development process we can, putting all the equity into ourselves, and then minimizing the tax burden to our company and to our shareholders. Anyone add anything to that?
No, that's pretty thorough.
Yep. That's a short version too, by the way.
Yeah, we'll get into so then we get to, okay, what have we been doing for 6 years? We've raised and invested north of $30 million in building this, and it was so that we would make sure that throughout the process we did not become a commodity. We maintained control over our specifications. We understood what we were building so that we could create the maximum amount of value. So we started with, building these individual buildings, and the assembly. This took a few years as we were going through. We had a 60,000 square foot factory where we built a number of projects out there, basically to validate all the materials, the performance, the cost, the labor model, supply chain. These buildings have to be picked up and moved around in a factory. They have to be put on trucks. We have to understand the cost of shipping. We have to understand the dimensions. What types of logistics carriers can we work with? What's their model? How does it take them? How do we crane these things? The contractual model, the legal, a lot of it, this was the plant that we were operating out of, where we built a number of projects, including the Valley Cities project, which you can see on the floor here. But these buildings are, identical. They're built to a 16th of an inch tolerance. We used a lot of experimental materials, using different light gauge metal. We had a Howick machine that we're using to create non-structural elements. We were water jetting elements to build in the bathrooms and the kitchens. But we also, in this approach, fully understood the assembly and the performance. These buildings were all inspected and approved as permanent real estate. Inspectors love these things because they're exactly identical. They were built by non-construction labor, so these are entry-level fabricators. And we understand the cost and the assembly process to build. And in the end, that particular project turned into this project, which is south of Seattle, which, this was our first multi-unit project. And remember, when you put units together, the process was, let's build a building, let's put buildings together, and then let's build up to 5 stories. And so the first 2 phases of the project is what the ramp up is what we've completed. But when you put buildings together, a lot of the code changes. The fire assembly code changes, fire life safety, your structural code, a lot of it changes. And, we went through that entire process as the developer, controlling the site, controlling the build, controlling it contractually. And we built a project in partnership with the state of Washington that was, less than half the cost that it takes them to build in the local region. So we proved a lot with that project.
Aaron, let
In
me add
terms
a
of,
couple
yeah,
really, really quick things you touched on shipping. So there's a lot of talk about the complications around shipping and why all of the follow cars and special permits. So we actually don't require special permits, and we don't require follow cars. There are big things that they get sent down the road that do, but we've intentionally designed not to do that. So we're very, very efficient when it comes to shipping. When people talk about having things assembled on site, there's panelized companies, for example, that do that. But remember that the efficiency of building on site and the labor complications and the quality of work over time and to be able to stabilize it become a really big issue. So there's a serious reason why we have a volumetric approach and everything's closed up. Also, it's closed up because the fire code and all the things, the earthquake that you have to deal with, unless you close it before you put it out, there's a lot to do on site to pass those codes, and it becomes quite a job. I think the other thing is very important to point out, Aaron mentioned, and we had the single story, and we designed a 3, we designed a 5. We actually went all the way to an 8-story design, and it's important to know why we aren't building 8-story. So as we learned the difference in the codes and how it worked and what it meant to the building, it also changed how we looked at manufacturing and the manufacturability of the thing itself. So we took it to 5. We said, well, this is good, but let's push it to 8, see what happens. Turns out at 8 stories, you wouldn't know it unless you go work on it. You have to fireproof all the steel. You have to fireproof the connections, all the fire code changes, the whole lot of things changed. And then it turned out that manufacturing is not simple. So we went back to 5 stories where manufacturing and advanced manufacturing in a stable environment is very possible. And then as you get through all of that, you have to ask yourself, when we designed a 3-story project, and it was about 42 blocks with 21 doors roughly. I think it was 21, 22. But what we found out is because of earthquake code, we were on a 6-foot water table, high earthquake, all these things. We had probably 30 different blocks out of 42 blocks. And we just sat down and said, there's a structural issue that we have to overcome to reach advanced manufacturing with a stable supply chain. So that's when we stopped and said, now we have to get rid of all these unique things for California, shear wall, bracing, tension rods, all the things that make California difficult. We then spent the time to get around that. Our buildings have none of that now, so we'll see that coming up. Go ahead, Aaron.
Yeah, I just wanted to show, I really like this video because it gets into some of the detail about how this works holistically. So as Nelson was mentioning, we did a lot of that prototyping work, understood where the limitations were and where the edges were, because at the end of it, we're also creating, it's a building system that can meet the market in very demanding markets, whether it's market rate, high-end luxury housing, hospitality, senior living, student living. And we spent a lot of money also on the manufacturing engineering so that we understood, how does this really move into an assembly line sequence? How do we go from, essentially from industrialized offsite construction into advanced manufacturing where it's just in time and we're using sub-assemblies as a way to significantly reduce the overall time to build. And so we came up with the different sequences. using a stabilized block pattern that had, the ability for us to build in any location because of the structural joint and seismic capabilities, and then start to really map out what happens as you ramp up your manufacturing capacity. What we've seen is a lot of companies in this space really misfire when it comes to capacity planning and understanding the size of the projects they're going to build. If you build too big too quickly, you're not going to be able to leverage your space because you won't have solved the problems that you need to solve before you go and build a project. And so you need to take a very methodical approach. It takes real prototyping. But if you can do that, you get to the point where you can do what we've done, which is basically to create this language of stabilized. It's about 6 core blocks that we can use to essentially build anything. And that structural joint and frame system means that we can combine these things for multiple stories, but most importantly, for really beautiful floor plans. Because at the end of the day, our customer's a renter, and that renter doesn't really care how the unit was built. And so for us, the efficiency of bringing it to market is a function of how can we leverage our engineering and our manufacturing approach to build what the market expects from an apartment and a real estate perspective.
So yeah, hold it on that picture for a second, Aaron. I want to point something out for everyone. So if you look at our layouts, what's unique about our structure, like mentioned earlier, we don't have shear wall. That's this thing that keeps the earthquake from breaking the building up. And we don't have bracing. That's another thing they can put in to keep the building from tipping. So we have this large span off the front, off that window, off the balcony that can run over 20 foot deep. And then you run your first column. And what that means is we can build this massive array of kind of layouts from big studios, 1, 2, 3 bedroom senior housing, co-living, all from the same thing. And it also means for us from the manufacturing point of view that the steel and all the items that go into that building are very stable. So as we change the design and layout and we articulate the building, that means that maybe the exterior moves and looks different because you don't want a big box. We don't have to change what we hold in supply to build it, and that's unique. And you also see the size of that balcony on the bottom of that picture. That is an 8-foot cantilever balcony, and that is impossible to do with other structures in earthquake. So we had to create something that we could not only put in affordable and attainable housing, but fit in Santa Monica on the beach or Orange County, La Jolla, where you're going to get $6 rents. And so by creating this highly flexible engineered structure, we can have all the balconies we want. We can have common spaces on roofs, all within California code. And that doesn't sound complicated, but we're the first one ever to take that approach. The only other people I would say that have a standardized approach that would work without modification would be shipping containers. But shipping containers cannot be turned into this.
They are terrible.
Yes, and articulation, I want to point out what I just mentioned. Some people, if they don't know, that building articulates. That means the window line pops in and out, and the windows are different size. That way it doesn't look like a giant, what they used to call Soviet era blocks, when there's just big blocks with some windows on it. It has to be something that's good for the neighborhood and makes you happy to live there. The other thing that our design allows, you'll see from these corner buildings, we have 9-foot ceilings in that front living space. And if that's big, we have 9-foot clear span. They also have floor to ceiling glass or doors, which again is very, very, it's first is good for living. It's also good for market. And that is another thing you will not see in traditional modular and high earthquake. Go ahead.
So it's a high degree of variability, which is important because the building, we don't want people to actually even know that our buildings were built with Blokable. We want them to see beautiful architecture, beautiful buildings that are in context, that fit in with the community, that are beautiful and attractive, and people want to live in them. So we don't want there to be a specific, from the beginning, the design, principle has been, we want to be able to build anywhere, and we want to build buildings that are beautiful and people don't even know that they're modular. And that's an important distinction, because it means that, we've spent a lot on understanding, because we're a development driven company. If you look at a lot of the product requirements and specifications, they're meant for us to be able to deliver, really high rents, like in solid locations and in places where people are really demanding in terms of the types of apartments they're going to rent.
Even that picture, Aaron, one thing we point out, the skin on that exterior. So we have this commercial, what we call a rain screen system, but allows us to put a very energy efficient and very commercial durable skin on the building and change those materials to be pretty much anything we want. And that means neighborhoods aren't going to get mad at you. You'll fit in to high rent areas. You'll fit in any type of environment, whether it's desert or coastal, it doesn't really matter. You have to be able to change that building without changing a lot of engineering and design. And so that goes to the flexibility of the system itself, that we don't have to change the factory to achieve that product.
And you get also with the, how do you take what is essentially a product, a building product on a per unit basis, which is that block? How do you manufacture something that is highly efficient on its own and structurally capable on its own, but then plug it into a building where you're going to have a lot of centralized systems, right? So having a larger multifamily building, you're going to have centralized electrical, centralized mechanical. You're going to have all these different systems that are run centrally because they're far more efficient. And so working your block into a larger building system logic was also where we spent a lot of time and a lot of money in engineering.
Yeah, and Aaron, I would add something as you go back to the picture for 1 second.
Mhm.
That isn't how every modular building would be built. So the way we are structured allows us to have centralized air and centralized hot and cold water. We can do a lot of things because of our kind of overall grand approach to the architecture and engineering. A lot of modular units are using what we call mini splits, and if anybody ever seen the units popping off the wall, you know what those are. So we're not looking at trying to cut corners and speed it up, but it turns out that it's more efficient to build the way we're designing it. It's also more efficient from an environmental point of view. These buildings are highly efficient in terms of what goes into them, but how they operate. And they're more efficient in the long run to maintain and own. So we build them as an owner. So how
They're
often
worth
do you have to
more.
change units to maintain them? They're worth a lot more because of it. Yeah.
Yeah. Yeah. So getting to some of the underlying engineering, the advanced engineering that sort of unlocks a lot of these capabilities, sort of the key part of it was the structural system. So Nelson, maybe you want to dive into the
Yeah.
background for sort of how the structural system came about and what it's able to do that, as far as we know,
Different.
nobody's ever done anything like this before. And it's a
Right.
major breakthrough. It's really nerdy and it's really technical. And so the thing is, it's not something most people look at a building and you don't necessarily understand the structural complexities and the site specific complexities of looking at a building and understand how it's going to stand up in an earthquake. But then stepping back from it, it's saying, well, what if this building were built out of blocks that came out of a factory? How would that work given the fact that every address in California has a different seismic code? So that's a
Yeah.
massive challenge.
So yeah, as I mentioned earlier, we went from a single to a 3 to a 5 to an 8 story. And as we did that, the first thing you look at is these are all steel beams and columns you're looking at here. So you figure what is the size of that thing that has to be put together, but then you have to apply local code. So we chose California because it's the most demanding, we should say. Harsh is another way to say it, but we want a resilient building. So as you build this, one way to solve a construction problem is to put a whole lot of bracing in, or to put walls that line up and keep the building from tilting in an earthquake. But what we found out as we designed is that really interferes with having a standardized manufacturing process. So you couldn't stabilize your supply chain, as we mentioned before. So this was the solution to it, and to sit down and say, how can we get rid of everything that stops the efficiency of the kind of manufacturing process, give us full flexibility in the build process so we can put whatever we want in the space? Well, there's two things we did. One is what we call our conventional connection, and that's just and this is a patented connection file for it that takes our HSSs and these tube members and puts them together, and that does one thing. And this is actually the other one. So that's, and we use that in a lower earthquake zone, and the reason you do that is because some places, even in maximum earthquake, the building wouldn't be hurt. It's just too resilient and too structurally sound to ever be hurt by, let's say you're in a place where the earth nearest fault is hundreds of miles away, you're just not to get hit. Then there's places like Los Angeles, San Francisco, parts of the valley, up in the mountains that are high seismic. And as you know, we've had large earthquakes and there's going to be more in the future. So because we build to own, and I personally own real estate, I have stuff that's called base isolation equivalent, and some other stuff is highly resilient also, but because it's long-term ownership. So when we look at it, we said, if we're going to build, then we shouldn't be asking ourselves, does it satisfy California code? Because what California code says is you must build so people live. It doesn't tell you build so you maintain your real estate. So we said, let's do something different. we actually invented the resilient connection, and that's where you've got the patent on it, of taking these HSS beams and putting them together. And in an earthquake, what happens is that little yellow plate on top of that joint, it would snap when there's enough flex in the building. And so when the building does that, the building doesn't fall over because it's got stops, but the building will move and sway until you get snapping in different joints. But because of the structure, we can then go back in, take and re-tilt that building. It's an odd concept, but it does hinge. So you just tilt it back and you weld a new plate on, and it puts the building back in service. So we are the first ever to use it for modular and have that patent on it. And that's what we'll be using in the major earthquake zones to maintain the integrity of our buildings and the value that we build into it. And I know that little frame looks simple that you're seeing in that picture. It is far from simple. The tube thickness in the walls varies. As you put mass on top of a building in an earthquake, it makes the building move and sway and has different periods. And so you have to have some things heavier, thicker, some lighter. And so everything has to be designed for a potential load, because we wanted to have a rectangle like you're looking at right there that we never had to change regardless of what we put up on top or below. So that's what we came up with. And so Aaron, you can go ahead and go through the next.
Just to stop for a moment. Imagine the engineering sort of sophistication of this frame system operating in a building of 50 units, 100 units, 5 stories high, moving around in an earthquake, right? So you're thinking about something moving backward versus it's a standalone ADU. You're going to drop it in someone's yard. You know what I mean? Like, it's not even the same language. Yep.
But you actually point something out interesting there. When you put together a bunch of units, there's another way to do this, which is done in some buildings and other areas where they go high rise, is you build a big expensive core, which acts as your central core, and then you have shear wall, and then you put these boxes in it and use that thing to anchor you to it, right? And then you put shear wall and exterior things. But we wanted to have a structure that we could just assemble blocks, and each one makes it stronger and better, and you end up with this big mass that moves properly and is accepted by code and doesn't require any additional bracing or core or anything else, no elevator cores. It just works the way it is, and that is an engineering feat to accomplish that. And if you look at that floor in that building, that looks simple. To achieve a diaphragm, that's what they call those things, the floor and the top, the diaphragms are part of the earthquake resilience. We've solved for that, and you still have to have it in such a way that you can put a bathroom in that has a slope in it, which is also complicated, but we've got all that figured out.
Well, then think about what this thing does at the same time. And we're very proud of this. But imagine at the same time, this building framing system allows us to build anywhere, just about anywhere in California, except for on the San Andreas Fault, but just about anywhere in California.
No. We could build on the San Andreas. You can't build in Eureka on the San Andreas.
Oh, Eureka. Okay, one particular place on the San Andreas.
It's an uplift.
So imagine this building system, this frame, is completely land agnostic. It means we can put it anywhere. We can put 5 stories of this using studios, 1 bedrooms, 2 bedrooms, 3 bedrooms, ground up over a podium with this building system anywhere, and we don't have any site specific shear wall, lateral bracing. We don't have things that would affect how we're going to run plumbing, how we're going to run electrical, how we're going to run air in and out of this thing. None of that's affected, which means we have a stabilized build. The other thing that does at the same time is this base frame is the core of a subassembly logic, which means if you have this precise framing basis in steel, now you can start to drop in precise subassemblies. This is where you take the concept of design stability, design consistency, and move it into making improvements on the manufacturing side. So this is a little anecdote I always tell people, which is, the Model T didn't become the dominant car because Ford kept redesigning it and changing it. It became the dominant car because they were able to drive the price down because they froze the design. They figured out the design, they figured out the manufacturing, and then they stopped and they said, now let's get really good at manufacturing this. This is a level that the industry and our industry has never gotten to. And this is what we spent all of this prototyping time and money on, was to get to that basis. And then also to have all of the software so that as we're preparing this manufacturing push, this entire system is implemented in 3D. So it's in Revit, it's in BIM, it's in our ERP system. We're pulling from our live supply chain. We understand our lead times, we understand our costs. So from the development perspective, when we're massing a site at the first place and we're laying it out, we're deciding how's this going to work. Does it meet with the general plan? Does it meet with the zoning? How much is it going to cost? Are the rents in the right place? We're making development decisions. We have the entire building system at our disposal as we're creating literally plan sets. So we have a point where as a developer, all of this has been implemented underneath in software in a fully sort of end-to-end process, which is another key aspect of the investment that we were making on the engineering side.
Aaron, I would add something that's really important, unless the people listening are involved in real estate. It's hard to understand. To get to the stage of having working drawings, that's what you use to build something. You start by looking at something and saying, I want to draw some cartoon drawings. Does it fit? And then you do some design drawings and say, well, how's that going to look? Do people like it? And then you got to work through those drawings. You got to get your money. You've got to go through entitlements. You've got to get everyone on board. And you still don't have a deal. You still don't have a contractor lined up, and you still don't have a modular contractor involved because you don't have the permits and the money. For us, and by the way, even in that path, once you do have the money and the permits, then you got to go to the working drawings and work with your modular provider and hopefully get what you wanted and hit the target you wanted. For us in the very first day, because of what Aaron's showing you that right there, we know what those drawings are. We know how it goes down on the site, the certainty in the product, the certainty of the design. We get rid of all the soft costs, engineering costs, and like I said earlier, the supply chain is stable. So we can get far ahead and not get stuck those year or two going out through all this mess. Go ahead, Aaron.
So there we've kind of closed it out. We're actually right on time. We've got 15 minutes for some questions. Just closing out, looking again at the webinar series. We'll send a follow-up to this that you all have it. Again, it's on the news section of our website. But then there's a few questions that we can get to now. And I think I would also encourage anybody else who has questions to drop them in the Q&A. The first one is a funny one, and we'll figure out how we can answer this question. But so it's coincident that there's another company called Blokable. There's not another company called Blokable. There is a company called Boxable. They started after us, which, take that as you will. But so they started their company after we had, filed for, our trademark and all that for Blokable. I would say that they're doing something completely different. I don't really want to get into the details on it, but I would say, buyer beware, as they say. So just, take a look and make your own decisions. But what they're doing is almost nothing similar to what we're doing.
Aaron, there's an easy answer to that without saying anything about either of us. You saw the page of codes that we satisfy, and this is not a thought. It actually, and I'll go to the second question in a second because it addresses that also. It is not a thought. We pass the codes. We are certified. We are here. We're California earthquake. We're all these things. And we actually have a large report that's put out by the Department of Energy, National Renewable Energy Lab about our efficiency and what our building does to carbon. But the other entity, whatever the name might be, has RVIA certification. So just sit down and go read the definition of RVIA and compare it to ours. If that's what you're looking for, there's a reason to buy that type of product. There's a reason to buy a mobile home. There's a reason to buy anything, right? I mean, you can buy a tent, it doesn't matter. But ours is for a very particular purpose. It's multifamily real estate in California, and we have to pass all the codes. And I just want to kind of pull that into the second question. We're not testing concepts, so we're far beyond that. So the business structure, actually, I built and given away about $300 million in assets. It cost me 145 to build, and I gave them away through non for profits using this particular business structure in commercial. I have 1 million square foot of real estate right now in commercial in Los Angeles, 500,000 not for profit, 500,000 for profit. So the business structure, we really understand. We have great depth in finance and law and structuring and business. That's done. This is the most efficient structure. The testing, the frame, all the stuff we've done, that we've already done. That's what we spent 6 years and over $30 million doing, was coming up with this unbelievable engineering and learning the hard way, putting all those shear walls in, putting all those exterior walls. In the last 2 years, we've removed probably 30-40% of the parts because we changed our fire assemblies, we changed the structural systems, we got rid of the shear walls. So as we changed that framing system and took it to efficiency and went to central HVAC instead of mini splits. So we went through all of that to get to that thing where we're at now. So we are at a place where we'll go out and build. It's buildable. I'm speaking as developer. It's buildable. It's permittable. It's done. So I think that gets to the first part of that. And forward looking, we don't have The interesting thing about us,
Well,
I
well,
think we didn't
we
probably
can.
share it. I won't talk about that, but I want to add one thing we didn't
No,
share in
I
the
can say
business
something
model,
else.
Aaron.
So we can talk about the SAC project.
Yeah, and I guess let me explain our business model. It's really, really critical to understand. Any entity that sells a product has to wait in that whole line of stuff we talked to you about was that development process. And that's a long drawn out process, and you may or may not get a contract. And then when you sell it, you'll get market rate. There's been a lot of studies done on this. McKinsey just put out a report saying that the best companies with good relationships, with perfect everything, may get to a 10% margin, may over time
On a project.
on a project. We look at it and say, we don't want to be subject to the market whims. We don't want to be getting paid a margin on what we make. We want to build and own the real estate. So our structure is not to sell thousands of units to developers. Ours is to build units and own them and get the revenue from them and all the tax advantage of it and the refinance proceeds of it. So it's it doesn't take a lot. We have small projects we start out with, and from that small start out, we actually do very well because we aren't selling. We don't have a backlog of 10,000 units we have to try to sell to meet our numbers.
Yeah.
Go ahead, Aaron.
And I can answer that one a little differently as well, which is the phase that we're in is the investment that we've made was so that we're not really testing out concepts in this. I mean, basically we've prototyped buildings. They're permanent buildings that we've built. We know their performance. We've been measuring them. These are buildings that have been put in permanent. They've been permitted. They've been approved. There's people living in them. I mean, the projects that we've built are changing people's lives. We built housing in places and for people who otherwise would be living on the streets. And we did that because we were in our prototyping phases. We were driving our costs down. So it didn't make sense for us to own the real estate because of where we were with costs. So because of who we are and why we do this stuff, it made sense for us to build those for not-for-profits. And we have people literally living. Everyone who lives in a blockable unit right now is someone who was previously either homeless or at risk of homelessness. And so we provided those buildings through our structure for not-for-profits during that phase. The 2 years since we shut down our factory have been spent on engineering, validation, and approval of all of these things. So in working on the structural, it wasn't like we were just kind of like jotting down ideas. I mean, we were working with some of the leading structural engineers in the world, people who build giant projects who have signed off on the 5-story system and said yes. As a leading structural engineer, I'm signing off saying that these are the capabilities of this system, and I will put my stamp on these buildings as they're brought to market as development. So these are far beyond concepts. Where the reason why we did that is because we've seen so many companies because of the nature. I think the entire industry has been fooled by this idea of modular construction being a viable business. I don't think it's a viable business. I don't think that any factory will ever survive the dynamics of boom and bust real estate cycles on 10% margins. If you look at a bunch of companies that were funded a year and a half ago based on forward-looking development, what they thought were commitments, when the interest rates changed, those all dried up, and now you have a lot of factories just sitting on their hands with overhead and labor. So this is the culmination of us making a decision to go in a very conservative, tested approach to get the engineering correct before we start manufacturing, which is a step that no one else has taken. And so the next project that we're building in the Sacramento area, we've gone through our pre-application meeting with the city. We've gone through our community meeting. The community loves the project that we're putting together, and we have a factory lined up that we've secured a lease on that we're ready to move in. That's the next phase of the business, and that's everything we're doing right now.
Yeah, what I would add, Aaron, to build a project for a developer is one thing, because you're responding to the architects and engineers and their view of the site. Because we are a developer owner, and because the solution is to compress the development cycle. So it's funny, you could buy steel, you could buy plumbing, and a lot of things. And because of our stability in supply chain, we lower our costs because it's stable in the ordering side. But it's the ability to build that same thing on a supply line that is standardized, and not that the thing coming out has to be standardized. So the real hard part of what we do is building something that can vary site to site over and over on each development without changing what the plant does. And so you have to be a developer to do that. You have to understand what it is you're going to build and what the limits are. And then you have to compress all that stuff that we pointed out earlier into the technology itself, into the design, and into the software. So that's what's been done already. So it's not a dream. It's the only way to do it. I think that kind of goes to the next question, which is, when will it be available to developers and homeowners? Kind of not a lot,
You can
because
distinguish. You can distinguish
that's
though. But if you have land, right? So if you have land,
Yeah.
that can be a useful conversation. We can talk about that, but we won't sell. And it comes up because again, the industry's been fooled. There's this thing called modular construction. It's not a viable business. There's no way it's viable because it's last in line in a commodity chain of inputs, and it doesn't. There's no margins for it.
Well, let's be honest, and we're going to wear two hats. We have enough time to tell you both hats. The black hat, we would be a fool to lower the cost by 40% and give the savings to a developer and tell them to go take it, because the leverage on the real estate would make them even more, and they walk away with all the profits. So let's just begin by saying we have deep experience in finance. I came from Wall Street. I worked for Skadden Arps, a Haas Lemonade guy. I've been involved in finance for a long time, and it's all about using money and leverage and making wealth. And that's what we're doing with our black hat side. And since we have a few minutes, I'll mention the white hat side. And it really comes to why Aaron and I think, are together. I was a dropout and raised on food stamps and came from a poor family. Worked my tail off, got back into school, and then went on to law school and Harvard, and then went to Wall Street, and then moved on into what I do now for my whole life, which is how do you use capitalism to solve this big problem? And housing is probably one of the biggest problems that capitalism represents. It's the same inputs, the same workers, the same money, the same everything, creating this thing that everybody competes over. So when we got together, said, well, we're going to lower the cost of housing to build. And it's a great business. You can make a lot of money because as you lower your costs and move into manufacturing, what happens when you can get to 2 weeks of manufacturing time? What happens when you drive your costs down that far? Well, if you don't understand real estate, we can tell you it means you can build real estate without equity. You can use it mezz financing, you can leverage it out, and you can make more money than anyone ever could. And the bigger thing is there's never competition because we don't sell to anyone. So it's the only product you can manufacture and not be competed out of, and that is tax advantaged and appreciates. So it's a beautiful way to do business. White hat side, which is why we're together. We both come from that kind of, let's just call it disadvantaged background and the hard side of life. And we've told our board from the day we started this, the one entity or one group that could never afford to buy from us or to rent from us are the underserved, because they don't make enough to rent in our market rents. They don't make enough to buy in a unit from us. So we have the ability to put out in the not-for-profit world using tax and financing other structures, which I've done before, and we'll do it here also. And we can put wealth in the hands of people at a fraction of the cost. We can put them into homes at a fraction of the cost, affordable to own. We can put homes into affordable or not-for-profits for affordable to rent in a way they've never done before. We can get her out of the light tech game and the rest of the housing cabal that works around that space. So my heart has been this forever, and that's why Aaron and I joined together 6 years ago. And Aaron, you may want to add to that.
No, I mean similar. I mean this is a very, very big picture and big vision, and the reason why we've executed it the way that we have is because it's necessary to maintain the value of what we've created and not allow ourselves to be commodified, because the entire industry simply wants to put us into a corner and ask us what's the price per square foot. That's what the whole industry wants to do. They're like, oh, you've got a factory, great, you can build this thing for me cheaper, I'll take all the money, see you later. And so the reason, that we came together and we're doing this the way that we are is because this represents an entirely different model for how housing should work. It scales, everything about it works. I'm going to answer these last two questions very carefully. And so you've got a question about what's the purpose of the webinar and are you planning to raise additional rounds? Invest.blokable.com is the place to go. So there's a site that you can go to which will provides an overview of how to answer those questions. And if you go to invest.blokable.com, you'll see that we are actively out there. And we obviously, in a webinar like this, can't discuss any specifics, but if you go there, you can follow down the natural path. And obviously you can get in touch with Nelson and myself if you have any more questions about that, but that's the short answer to that question. Any other questions before we start to wrap up? Don't be shy. This is the opportunity, and as you can tell, Nelson and I have no problem talking for hours and hours and hours on this stuff. So,
Gave you the abbreviated version of things.
yeah. Well, we got someone's hand up. Let's see. I don't know what that means. So, Steve, maybe you want to drop your question into the Q&A. Just let him talk.
Yeah. I like the one that
If
just
you,
came
Can you
up.
hear me?
you have a
Or,
question?
or
Yeah,
I
we
do.
can hear you now.
I do.
Nothing profane, please.
No, not at all. This is all very
That's good.
helpful and interesting.
Yeah.
Just if you're a landowner, what is the sort of basic deal structure you guys are seeking?
Yeah, so we're flexible. So it really depends upon value, entitlement position, leverage acquired, rents possible on the site. So that we have another Steve, our chief development officer, Steve Chun, has great real estate and finance background, as do I. And so, typical underwriting. If we were in and I'll give you an example. We had a place where they had rents of about 6 to 650 a foot, and the person had the dirt for a very, very low basis because they've sat on it forever. But they couldn't build there because it's probably one of the most expensive places in California to build. And that's why it costs 650 a foot. So they came to us and said, "We'll be happy to buy the blocks from you, but we're going to own it all." We said, "We'd be happy to build it and give you a little piece of it, but we're going to own it all because you don't underwrite." So we never came to a meeting of the minds on who brought what value. We're flexible. And all it really depends on how the process underwrites.
Okay, thank you.
Yep. And also I should add, we can help with entitlements because unlike others, and I've done a lot of what as a developer, pre-development, you can spend 100,000, 250,000 going out, coming up with plans and everything else and doing your studies and trying to get a deal done. The nice thing about our structure is we can look at a site, get through massing, get into the meetings with cities with something that really represent what that project's going to be. And we know what that project's going to cost. So it brings a lot more certainty in the planning process. And so far in dealing with cities, we found a lot more kind of happiness and cooperation when they had a nice rendering that they made comments on and we changed and articulated it and we got quick feedback and we knew it was buildable instead of we thinking we can build it.
So we're getting ready to wrap up. There's one last question which seems to come up. Have you talked to Elon? No, introduce us. I mean, we've in different ways we have connections. There was this sort of funny, but no, we're not speaking with him directly. I'm sure he'd love it, but it's a very different type of model. If you have an introduction to make, we'd love to chat.
Yeah, and I think that's an interesting thing too, is that he went out and found out, of course, I think he said it before, manufacturing is hard. You think it's easy to design something. Manufacturing is really hard. But let me just say, and I don't mean anything negative, manufacturing a car is easier than manufacturing housing that fits everywhere because a car goes down a road and there's wheels on it and there's codes
I don't
that
know.
have you
I
deal
don't know
with.
if I agree
I
with
don't know,
that.
man. I'd rather,
No,
I know you don't,
no,
man.
I think engineering it is harder in our case. The manufacturing that we have to do is actually
no, it's harder. You're correct.
not as complicated. Yep.
You got me there. Yes, it's
Yep.
the engineering of a thing that will fit anywhere to any code for any earthquake. And by the way, we never told you earthquake anywhere, even on the San Andreas, except for just a couple of places with hard uplift, and we have to take it down from 5 stories. Wind up to 160 miles an hour, constant with gusts, and then soils of any condition. So to solve for that was ungodly complex, and to be able to manufacture it, you could always solve it and think you have it, but then go try to manufacture it over and over. That's the part that was just every time you pulled a thread, the arm came off the other thing, and it took a lot of work there.
All right. Well, with that, we're going to wrap it up. We brought you 1 minute over. We really appreciate everyone's time. You can reach out to Nelson, myself, Nelson at Blokable.com, Aaron at Blokable.com. We'll follow up with this. The webinar schedule is on our website in the news section. And yes, the call to action is invest.blokable.com. Go find out more. And everything we're doing here and going out to the public at this phase is basically to build a movement of people who understand what we've actually put together here and want to be part of it. So great to have everybody here, and thanks for your time. Bye.
Bye, everyone.